Hello traders, Gary Wagner for Trending Markets just before 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. And it was a good week for equity traders and traders across the board. Dow Jones Industrial Averaging finishing moderately to softly higher, but nonetheless strong week as a whole. Dow closing over 17,000 to close at 17,084 and change, up about 33 points on the day. Now, we did initiate positions back on the 6th, getting long both the Standard & Poor's 500 vis-a-vis the E-mini and long positions in crude oil. Let's take a look at those collective markets. First of all, S&P closing in essence unchanged, softly lower on the day, but does close over 2,000 at 2,00650. And that is a dynamic move from the beginning of the week. And considering that we were able to enter this trade at about 1968, we've seen this market move considerably in our favor. And most noteworthy in terms of a technical move in the market is as follows. Now, we're looking at a daily chart. On this daily chart, we have two basic moving averages. The shorter term is a 50-day moving average. This blue one here, the longer term, is a 200-day moving average. We also have identified a top in the market. This is that shooting star that we got mid-September, really capping the top of the market. Currently, we are trading on a closing basis well above that. That's a great sign. Also, over the last two trading days, these candles represent that. We've actually been able to now go over our 50-day moving average. So all in all, we had a tremendous move in the market, considering that October has only got 8 days in the market. Just prior to that, we were trading at around 1850 on the low and managed to really see some substantial ground and movement over this week. So we are currently looking at a weekly chart. Each candle represents a week. We can see the lows that we had. This is the market trading off back in October and November of 2014. That low was almost achieved when we saw this meltdown back in August, taking us to this intraday low, which is just above the prior low that we saw, but nonetheless a startling move to the downside. Now, when we look at our basic market, we can see that we had a series of bottoms that came in roughly at 1900 on the Standard & Poor's. These are the lows here. Of course, we did get this low back at the end of last week, but when we consider the range that we have seen this week, we have seen tremendous movement to the upside, and we have closed well over these bodies right here. Even though we have a high up here, it's not as important as where the market closes, because obviously on a weekly chart we're comparing Monday's open to Friday's close. So we've seen a substantial move, and we're well into this territory, which officially puts us out of a corrective period. My recommendation, obviously, we are going to maintain our long position in the SP 500. We are also going to maintain our current stop. Traders, the second trade that we put on the 6th or this week was to initiate long positions in crude oil. Now, we got in at about 48.50, roughly in that area. Market is 49.50, so we've got about $1 on the trade. Initially, we put our stops at 45.63. We have moved them to just below 47. Now, in terms of what I am looking for upside targets on this particular trade, I really want to see if we get continuation next week and the market continues to firm up. I don't expect any kind of real resistance till about 52.58. It corresponds to a couple of things. First of all, a 50% retracement, and the retracement is from these tops at 60 down to this low right in here. We also can see quite effectively that we had real resistance in this area, and we also, though, below that had these series of tops. So that would be the first place. If we see this market continue to firm next week, I would look for approximately 52 to 53 as our exit target. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for another daily update and review. Bye-bye.